What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like AMD, Apple, Nvidia, Netflix, Amazon, and Tesla. So it's a little bit of a longer watch list than usual, but it's because we have a lot of levels to go over, and they're all very important for the health of the market next week. So let's go ahead and get started by first talking about SPY, where we're going to give you the support and resistance points to focus on. We're going to give you these points for all the stocks on our watch list. That way you know exactly how we're planning to trade them, where we're going to take profits, and where we're going to cut losses if necessary. So first, we're talking about SPY, and we're going to do so on the daily candles, where we can see that SPY is reaching highs that have not been seen since the end of 2022. So this is quite impressive considering the year we've had with all the headlines and the headwinds from inflation to the Ukraine and Russia war, and most recently the debt ceiling. So there's a lot of headwinds that have been thrown at the market, but you can see that it has bounced back. On the biggest headwind, of course, not to mention, is the banking crisis that happened. So all these things tried to take down the market, but the market has been resilient. In fact, we have not made lower lows or lower highs all of 2023. So overall, the market is bullish, and we do have to mention that markets are forward looking. So while everybody was worried about a recession in 2023, we have to remember that the market already reacted to what's coming. So markets will look ahead to see what's going to happen, and then investors will adjust their portfolios accordingly. So obviously, at the end of 2021, investors and hedge fund managers and institutional investors saw the fact that the world was about to slow down, the economy was about to slow down, and they began selling off. And therefore, they brought us all the way down to the 200-day moving average on the weekly candles for SPY before bouncing us back. But you could see that as of last week, for the first time in a very long time, the market has moved back, or SPY has moved back above all of its moving averages, including the 100-day moving average. So this is very key to note because these moving averages act as support and resistance points. So when the markets are trading below them, that means the market will continuously get rejected at them, just like it did so here. But you can see that we have now moved back above it, and buyers are still very strong. So volume is still very much pouring into the market. And when we're looking at the daily candles, if you've seen our videos in the past, then you know we actually have created this line, this red line, and it's been on our chart for quite some time now. And our goal target for SPY has been between 430 and 435 for most of the year ever since we created these highs here. And that's just because this has been the trend line that we have been meeting before rejections, and so we are expecting the market to push higher. Now, many will argue the theory that the market is overbought and it needs to pull back or it needs to crash for whatever reason, for whatever economic reason that they believe in. But Meta would be a great example of showing how far or how long a stock can rally before a pullback. Meta had a phenomenal upside move in January of 2023, and you can see that ever since then it's been rallying. Many people will argue that this is overbought, it needs to come down. However, you can see that it's still very, very much active, and the stock has ran much further than any short sellers have thought. And so, speaking of short sellers, the market last week, or short sellers last week, lost about $2.2 billion short selling Nvidia, and we mentioned this in our last video. And that is the reason why markets are now starting to see so much more bullish inflow. At a certain point in 2023, we had an insane amount of short seller volume or short seller percentage in the market, and that just goes to show that when there's too many people weighted to one side, especially if it's retail traders, market makers will usually make the opposite move happen. That way they can squeeze those people out. So this explains why after Nvidia's move up, you start seeing stocks like Tesla also moving up sharply, because short sellers are very active on a stock like Tesla. So when they see that the stock like Nvidia moves up, this is a high growth stock, they're automatically going to get scared and they're going to start closing their positions. And to close a short seller's position, you have to buy back shares, which means that the stock will go up. So that's the reason why you're starting to see all these high risk and high growth stocks starting to move up sharply. It's because those short sellers are starting to get scared and they're getting out, which is likely going to stay the case for quite some time on major markets and major tech stocks, now with the AI craze especially. So now let's move on to the short-term candles on SPY. So we've already talked about the weeklies and the dailies. Let's talk about the 5-minute candles. We can see that the market is moving into a short-term overbought position, but we are still very bullish on it. We do expect some kind of pullback this week. However, this week is Apple's Worldwide Developer Conference. It's going to last from Monday to Friday. This is where they're going to introduce all their new tech products, and that usually gets investors very excited. Remember, investors are already feeding off the fact that the market is moving higher because of artificial intelligence. So Apple is now going to come out, which is the most valuable company on earth, and they're going to introduce brand new technology that's likely going to excite investors. So the stock is nearing an all-time high, and we're going to jump into its levels shortly when we cover it on our watch list. But just wanted to say that is the biggest event happening this week. Last week, the market's move was very much based on the unemployment rate. We saw the unemployment rate drop or rise to 3.7%. However, we still added a ton of jobs in May. So this is a phenomena that hasn't happened since the 1980s, where we add jobs, a tremendous amount of jobs, yet the unemployment rate continues to go up. So markets actually celebrated the fact that this happened because a higher unemployment means people will spend less. And ironically, this is a good thing for the Feds right now, because if people spend less, then inflation comes down. So now moving back to the short-term charts on SPY, knowing the events that we're focusing on this week, during the worldwide Apple conference, we may see a rally from tech stocks, but I would be very wary. You're going to see that most of our price targets on our watch list are going to be very modest price targets this week. We're not going for anything extravagant, because we do realize that the market does need a good pullback. Now on SPY, SPY can pull back to 426 and be just fine. However, if it moves below 422.50, that's when things can get a little sketchy for the bulls. So you have to be careful. Below 426, this is a great entry range. You can start kind of getting into small positions if you'd like, and then setting a stop loss just below 422.50 or just below 420. But if you do get into contracts and you're planning to swing any option contracts, make sure to give yourself at least 3 weeks till expiration, because this is a time in which markets are overbought and they could see sharp pull downs at any moment. So you want to give yourself time on those contracts. Now, if we do pull back and we break below 422.50, then we may take a short or a put position down to 419. Now, the short position would only be a day trade. We would not want to hold any short positions overnight unless market volume on the selling side increases tremendously. If we break above 428.80, so say the bulls continue buying and they're very excited about new tech from Apple, then our next price target is going to be 431.70. And then, of course, as we mentioned on the daily chart, if we continue moving above that, then our next target is going to be where this trend line ends, right around 435 to 436. So those are all the levels, and the focus is on SPY and major markets. Now let's jump into our watch list. So we're going to start with AMD, which AMD, ironically, for a stock that has been so strong, actually dropped last week while the market was moving higher. Same thing goes for Nvidia. And this is where we get to cover a very exciting thing called market capital rotation. So when bulls are buying, they're not looking for a single sector to buy. They're looking for multiple sectors to buy, but they will slowly transition their money from one sector to another. So when we see stocks like Tesla begin to go up, it's not surprising stocks like Nvidia may start coming down. And that's just because money rotation is happening. So they're taking some profits here and they're putting it in other stocks. This is a very normal occurrence, and it's actually a very healthy occurrence, because if money's not rotating from one sector to another, one sector can become overweight, and that could lead to a market crash, because then that one sector is holding up the entire market. But when you start seeing money rotating into stocks like Baba, which is a Chinese company, and Tesla, which is a major leg in the market, then you can start realizing that the market is now rounding out in a healthy manner. It's not just rounding out because there's just one exciting sector. So it's very good to see that what we're seeing, and we do expect the hospitality sector to receive some attention soon. We're seeing a lot of activity on companies like United Airlines, on Airbnb, on Hilton. So look for the hospitality sector, and don't forget, the hospitality sector and the leisure sectors have been some of the largest hiring companies this year. So they're hiring a lot of people, which means there's a lot of demand. So keep that in mind when you're taking your investments and your trades. Now, AMD, the levels that we're focused on, it's going to be a breakout above 122 for a price target of 126 to 128. And if we break above 128, then we expect it to move to 130 to 132. Now, AMD lagged last week, which can set it up for two different things. If the market decides to have a full-blown pullback, then it's going to come down, and we expect it to come down below 115.80 and move to 111 to 112. But if the market rallies, then semiconductors, considering they lagged the last week, they could be moving this week. So if it moves above this level, this is going to be our upside price target. If we enter, we would place a stop loss just below 122 because our entry would be just above the breakout. Now, the next stock on our watch list is going to be Amazon. Amazon, another great high for them last week. You can see they jumped up with the market on Friday, but they pulled back all day. And that's not unusual because a jump up this far away from a moving average, plus it entered a little bit of an overbought level. On a Friday, especially before a weekend, people will want to take profits, and which is completely natural. But here are some levels that we're focused on for Amazon. It's currently trading in a bullish trend, but remember we talked about modest price targets, especially for companies that are a little overbought. So if we are taking a bullish position on Amazon, we would do so either here, exactly where it's trading, and just place a stop loss just below 122.35. Or if we want a breakout play, and this would just be a scalp, you can see it's only like $1.30 move roughly. So if it breaks above 126.40, we would take calls. We would place a stop loss just below that level, and our price target would be right around 127.70. So that would be the upside move on Amazon. But if it breaks below 122.35, then these are the downside price targets for it here, 119 and 116 to 117. The next stock on our watch list is going to be Netflix. Now, Netflix has been on our watch list, and so has Tesla, by the way, for quite some time. You guys have seen these stocks on our watch list for the last few weeks, and they have been moving phenomenally to our price targets. So make sure you're noting the price targets that we are giving you because you want to take profits at those price targets. So Netflix is starting to look like it may need a pullback, but bulls, if they rush into the market this week, then we are expecting a further breakout. Remember, you can expect things on the market and you can just trade what's happening. Don't trade what you think, trade what you're seeing. So here, if you're seeing Netflix break out above 407.50 with strong volume, then we are looking for a price target of around 414 to 415. Above that level, it can move to 428 to 429. Remember, this is an ambitious price target, so going back to what we said in the beginning of the video, if you are trading contracts and if you're swinging calls, make sure you're giving yourself plenty of time because these are ambitious price targets and these stocks are already a little overbought. So if they do pull back, you want to be aware of that. And if Netflix moves below 385, so say the market comes down and it doesn't hold this week, then if it moves below 385, it can move to a price target of 377 to 378. And below 377, it can get a little ugly. You see how vertical this rally is right here? The more vertical the rally, the sharper the decline will come because those buyers will be very quick to sell just as fast as they bought down back to a support because they're all taking profits. The next stock on our watch list is going to be Nvidia. Now, we just released a video on Nvidia, and we told you that our new price target on Nvidia is roughly $1,000. We explained that in the video and why we think that is. We won't go over it now because that is a far off price target, but let's focus on the short term for Nvidia. So if you are looking at the short term, you will see that Nvidia has been consolidating near the highs of its earnings gap up. So everybody thought that Nvidia would start crashing down right after earnings. However, that is not the case. And the reason why is because short sellers are nowhere to be seen. They already lost over $2 billion. So they're scared. And buyers are too greedy. So obviously everybody wants to capitalize on artificial intelligence. The media and everybody else is talking about Nvidia being the godfather of artificial intelligence. So with that being said, people are interested, and not just institutional traders, now retail traders are starting to take interest as well. So as Nvidia continues to consolidate here, we can take an upside position because Nvidia is giving us proof that buyers are still interested. You would place your stop loss anywhere below 375 to 366. Now remember, we talked about giving yourself time on contracts, and the reason why you want to give yourself time is because you want to have the opportunity to average down, and you want to have the opportunity for a stock to consolidate as it needs before it continues its move up. So Nvidia here will need to break above 405 in order for it to move towards 415 to 420. And at that point, if it breaks 420, that is a blue sky breakout. So any short sellers that are still holding the stock are going to be running for the doors, and the stock is going to continue its rally up. We do expect the rally to continue sharply higher, and we're expecting Nvidia to reach well over 450 in the coming months. But our ultimate price target is going to be 1,000, and we expect the stock to eventually split. And remember, we have an entire video on this. We will post it in the description. Now, the next stock on our watch list is going to be Apple. Apple finally reaching an all-time high, almost. It's almost at an all-time high, and here are some levels that we're focused on. Remember, they have their Worldwide Developer Conference this week. And just be careful playing Apple this week because market makers have a tendency of what stock is getting attention, they tend not to move it the same week. So Apple may very much continue to stay flat this week or even pull back, and then next week it'll make its move. So keep that in mind when you're trading Apple this week. But currently Apple is in a very bullish position. Obviously, buyers are still very strong. You want the stock to hold above 180 to maintain its best support, but if it breaks below 180, it can still fall to 179 and still be okay. But below 179, again, with the vertical rally, that will be filled very quickly, and the stock is likely to move towards 176.50 to 177, which would be our downside price target if we take on a short or a put position. Last but not least, Tesla has been a very strong one lately. You can see that volume is pouring in. Relative strength is extremely strong above 70, and the stock is nearing a high not seen since February 2023. So very exciting news for Tesla, and we do expect it to continue going. However, the stock could potentially use a pullback. We can see that this rally is bullish and it's very vertical, which is exactly what happened here. However, you'll notice that after just a week of rallying, the stock needed to pull back, retest to continue pushing. So Tesla may need to do that in the coming weeks. We may see it drive itself to 220 or something along those lines, and then start pulling back towards 198 to 205, consolidate, and then continue pushing its move. Any stock that's moving too vertically, it becomes uncomfortable, so we would love to see the pullback. That way we enter at a healthy price. Here are some levels that we're focused on for Tesla. It's very clear cut. Tesla above 208 continues to be the most bullish it can be. If it breaks below 208, then it can fall towards 199.50 to 201, which would be our first downside price target. However, if Tesla continues to push higher this week and it breaks above 217.25, then we do expect it to move to a price target around 222 to 223 to start. And that is not a very ambitious price target. It's very modest, and that's because the stock is already trading in a little bit of an overbought level. So we want to get in and get out kind of quickly before a potential sharp pullback comes in. So thank you guys so much for checking in. We hope you found this video helpful. Don't forget to subscribe and like.